The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Tucker with you on a very happy World Cup Thursday here.
Oh, yeah.
Yeah, that's right. The World Cup kicks off today at 3 p.m. Eastern with Mexico battling South Africa in Mexico City. And then 10 p.m., you can tune in to watch the South Koreans take on the Czechs. And so, nice little start to things. The U.S. team kicks things off tomorrow against Paraguay at 9 p.m. Eastern. They're going to be out in L.A. for that game. And I got to tell you, have either of you seen any Scots around Boston?
No, because I don't go into Boston, but I've been hearing about the Scots.
They are everywhere.
Pretty excited to be here.
Oh my goodness! Like, first you've got like the Scots that are just like going through Boston and playing bagpipes and everything.
Yeah. Can't understand a word they're saying.
But then the other one that I saw was somewhere on the South Shore this morning. So some guy woke up and heard bagpipes outside at 6:15. And, opened the front door, and apparently the house across the street from him has turned into an Airbnb for who knows how long. And it's all, he's like, the Scots arrived in the dead of night, and they're outside playing bagpipes at 6:15 in the morning.
Yeah.
And, the house is, covered in Scottish flags now and stuff. It's just fantastic.
Yeah, top-notch stuff.
I don't know, if you can't get, hyped up for the World Cup because of, you're not a soccer fan, that's okay. I urge you to reconsider. That's fine. But there's just something about people from all over the world coming in, just all kinds of crazy stuff happening as they discover America. And I think it's fantastic. There's actually, I hope this isn't a bit, I hope it's real. But there's some guy, Freddie, who claims to be from Germany, who has been traveling through the Southeast, stopping at, Waffle Houses and, waterfalls and stuff like that on his way from, I think, North Carolina to Texas.
Okay.
And it's just this German guy who's apparently just in awe of everything that he's seen.
Everything that is American.
Everything from we did a 1 a.m. Waffle House run. This is amazing. We stopped at a Buc-ee's on the way to Texas. I can't believe we don't have these in Germany. It's pretty fantastic.
Yeah. Yeah, good stuff. It is exciting even for those of us who are not soccer fans. And if you do want the real athletic competition of tomorrow, my wife will be chaperoning a trip to the zoo in the 94-degree heat with a bunch of first graders. So I think that might...
when your hot water tank is empty, that means you have no more hot water. You can't just, be it's empty, there's no more. It's the same thing if you are an oil refinery trying to run your business. You can't let your tanks get too empty, actually. It doesn't work like that. So where we stand right now is that as of last Friday, the Energy Information Administration said that U.S. domestic crude inventories are now down to 426 million barrels, and over the last 2 weeks have declined 7.5 million barrels a week. Over the last 4 weeks have declined 6.5, and over the last 6 weeks have declined 5.5 million barrels a week. So the draws are accelerating modestly as well. I did the math so that you don't have to. It points to us getting into that critical range sometime between, if you want to take like the front end of that, the 390 million barrel range, you're coming up on July 8th. If you want to take the 350 million barrel range and the slowest draw there, you're at September 10th. Realistically, you're going to be somewhere in the middle. Late July to early August is probably what we're looking at.
Which means what in late July or early August? That that the United States is exporting none or a lot less oil from our reserves.
Yeah, here's what's happened. U.S. energy exports have increased by around 2 to 2.5 million barrels a day in the last 6 weeks. Once you get through that excess crude inventory that we have, we can't do that anymore, which means one of two things. Either A, you have to continue exporting crude at the expense of domestic inventories, meaning that you would end up with shortages domestically, or those exports need to come down and you need to find a way to balance the market through price, because that's how exports come down, is the price rises so the oil stays here instead of being exported. So where most people who are really plugged into this think this goes is that somewhere in late June to mid-July, gas prices need to start to rise, and so do crude prices, because otherwise you get to the point where you're still exporting all this, because importers, like other importers of American crude, are happy to continue to pay these prices. They will.
Yeah.
And if you don't see prices rise to keep the barrels here, then you can continue exporting this extra 2.5 million barrels a day, but we are not going to have the same supply in the U.S. So you can have one of two things. Maybe a combination, but most likely one of two things. Well, actually, you probably would have a combination of it. Here's the deal. You can either have prices rise to match supply and demand, or you can have shortages. That's the only way that you can get the math to work. Now, I realize that most of you listening, if not all of you listening, are probably like, Chuck, you're a moron. And I say, thank you. But you're saying, Chuck, you're a moron. Gas prices have come down from, like if you're looking throughout the New England region, gas prices have come down 20 to 30 cents in the last 4 or 5 weeks.
They have.
Chuck, you're a moron. Gas prices are coming down. They're not going up. To which I say, I know. I've been watching them too. And I'm not going to lie. There is a 36% part of my brain that's like, am I just missing something? Am I like, is there something I'm missing that hopefully we can get to September and be like, yes, Chuck, you were a moron. Like you missed this, and here's why prices didn't go up. But the other 64% of my brain is saying, we're seeing these inventory draws happening right now. They are not escapable at any time in the next 4 to 6 weeks, because even if the Strait of Hormuz opens today, the oil from it doesn't get where it needs to go for 4 to 6 weeks, and the tankers that are in line to pick up American crude and refined product, they're going to continue on their way to the U.S., because they're not going to turn around and be like, hey, we got a chance to maybe get oil from Hormuz and get stuck there if things flare up again. No, they're going to keep going to the U.S. So the draws for the next 4 to 6 weeks to get us to these, questionable areas are set in stone. And so this is why, I wake up most mornings wondering if there's something I'm missing, because the math seems so simple, and it's not like it's speculative either. We're seeing the draws every week now.
Is somebody out there betting on China being a magic unicorn that starts exporting from their reserves or something? I can't, because I'm with you. The math doesn't seem to make sense. The piece that people are writing about is how China kind of surprised the world market by curbing their consumption dramatically by about 5 million barrels a day.
Which is, by the way, 45% of their domestic usage.
Right.
It's a huge drop.
Huge number. And so the problem with China is, unlike the United States, they don't exactly publish how much they've got, so nobody has any idea.
We don't know what they're doing.
How long it's going to last. Are they just not burning oil? Are they taking it out of their reserves? We don't know. Well, we kind of know that they're still burning oil, but we don't know otherwise where it's coming from.
It's certainly coming from reserves.
And they're probably not going to just look at this and say, we could keep prices low by just suddenly selling all of our reserves on the public markets. I just don't think so.
Well, and look, we don't know if this is something they can continue for 2 months or 2 years.
Yeah.
And there's plausible explanations for both. So I remain 64% convinced that, look, late summer, there's something coming. But I won't lie. I look at the crude prices that we see every day, and I'm like, this doesn't make sense given what we are seeing in not just domestic inventories, by the way. You take a look at Singapore, just as an example. Singapore, for those who aren't plugged into the energy world, is a massive refining hub and fuel distribution center. Jet fuel and bunker fuel for ships are the two main things that are the focus there. And Singapore is now running 22% below its normal inventory levels and is getting to the point where in the next 2 to 4 weeks, they probably start scraping tank bottoms and saying, okay, we can't make the math work either. So this is not just a U.S. thing. Everyone is kind of saying this, and yet prices aren't reflecting it. So I don't know why that's not the case. I'm not rooting for higher gas prices, but I see the math, and I'm like, this is where it should go, and we're not seeing it. So I do wonder most days, is there something very simple and elementary that I'm missing?
Haven't found it yet. I've been talking about it for 3 months.
I haven't found it, and I'm at the point now where I'm like, okay, we're just going to see what happens over the course of the summer. And if there's something I'm missing, great, I'll be happy to be wrong in hindsight. And if there's something I'm not missing, then unfortunately we're heading for, gas prices rising significantly again in the second half of the summer. Let's take a quick break. When we return, let's talk a little bit about the Fed, who have they got a meeting coming up 6 days from now, Michael. We've got Kevin Warsh's first meeting as Fed chair on the 17th. We'll talk about inflation and the Fed when we return.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
So next week we've got Kevin Warsh's first Fed meeting as chair, and we got a piece here in Barron's Day titled "The Fed Must Stick to Its 2% Inflation Target." It won't be easy. The question that's obviously the one to raise here is a 2% inflation target really a target when you haven't been at 2% inflation in 6 years?
No, but you got to talk like it is.
So here's the thing. Like the Fed has a credibility problem that has developed. And, we've talked about, again, where the issue was, kind of front and center, which was 2022 and early 23. And we talked about how Jay Powell kind of sucked at his job during that 18-month period. Didn't do a very good job. In recent years, 24 and 25, we thought he was much better because you did see inflation back down in like that 2.5% range. And while it wasn't 2, we ultimately did say, look, you can make a convincing case that you can have really good economies even when inflation is running 2.5 to 3%. You just don't want to see it like bottom there. And then, we said going into this year, I mean, I'm sure one of our shows, like you can pull it's not tape that they keep it on. You can pull the audio. And we said, look, the problem with a 3% in 2.5 to 3% inflation level is that part of it was fueled by falling gas prices last year. And we said, hey, if gas prices reverse in 26, you could easily end up back at 4 or 5% inflation. And lo and behold, look exactly where we are. So the question is, look, is the 2% inflation target viable? And my answer is no, because historically, we've basically never had inflation at 2% for long periods of time.
Sure.
It's never been like high for long periods of time, but we've generally been somewhere in like that 2.5 to 3% range. The Fed only came up with the 2% inflation target in the last, they formalized it in the last 15 years or so. I believe it was under Ben Bernanke when they did it, but maybe it was the tenure of Janet Yellen. But the point that I will make is you cannot scrap the 2% target as inflation is rising through 4%.
Right. So yesterday's inflation report came in at 4.2. Headline 2.9 core. Is that where we were?
Yep.
Which
2.8.
2.8. Excuse me.
2.9. I don't know why my screen's showing 2.8 on this one. Maybe it hasn't updated.
Okay. In either case, I don't want to generally categorize, but The 4.2 number is a very uncomfortable number. It is pretty substantially higher than wage growth over the last 12 months, which came in at 3.4%. So that piece of it is uncomfortable for just about everybody. The actual core inflation numbers, I think by some expectations, were a little bit, well, they were in line and, reasonable for this moment in time. And I think that's what Kevin Warsh is going to be latching onto more than anything. But we are starting to see the inflation spread outside of oil, right? Like, I know we'll make a point of this later, but the inflation report included, I think it was a 14% increase on computer hardware prices and things along those lines.
Yeah, but that's a one-off.
I recognize that, but the concern that I have beyond oil markets is that AI spending is going to crowd out other types of spending and drive up prices for components that go into everything. And granted, it's still early for that, but do home construction costs go up because AI spending is crowding out everything else? And that would be the concern, that you start to get some indication of that in the next several inflation reports.
Well, see, the piece that I come back to, Mike mentioned, hey, in the last 12 months now, inflation has outpaced wage growth. That is rarely the case for any extended period of time.
Yeah,
and there's two reasons why. One of two things happens. Either A, inflation can't continue to maintain that rate because wage growth is slower and so inflation ends up falling. Or companies start raising wages because people are saying, hey, I need, a living wage in order to pay for this. And then wages start growing faster than inflation, which gets you into that wage price spiral. We'll see where we end up here because, again, this is something where at some point, energy prices are going to fall. When that is uncertain. Whether it is 3 months away, 6 months, a year, this is the big question. Quick break here. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One missed retirement deadline could cost you thousands of dollars. Our new guide, Understanding RMDs, breaks down the rules for required minimum distributions, including when you have to take them and what can happen if you get it wrong. This isn't just about taking money out of an account. Your RMDs may affect your tax bracket, the taxation of your Social Security, and even whether you pay higher Medicare premiums. This guide also covers common mistakes people make, like forgetting about old retirement accounts and mishandling inherited IRAs. If you have money in a retirement account, this is information you need to know. Call us right now at 800-393-4001 to get your free copy of Understanding RMDs. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our senators, Edward Markey and Elizabeth Warren, and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your new guide, Todd, demystifying the top 7 estate planning trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are seeing modest gains with oil prices in focus after President Trump threatened to again strike Iran tonight. Investors are also digesting a hotter-than-expected producer price index where wholesale prices climbed 1.1% in May. Right now, the Dow is up about 0.6%, S&P 500 up 0.33%, NASDAQ up over 0.4%, Russell 2000 is up just over 1% higher. 10-year Treasury yield down 1 basis point at 4.52%, and oil mostly flat at the moment, trading right around $90 a barrel. Oracle falling 11% after it posted a larger-than-expected spending related to its data center build-out. Oracle also said it plans to raise an additional $20 billion in equity to pay for its AI build-out. Meanwhile, after sinking 28% yesterday, shares in Supermicro Computer only up by 0.5% today. Yesterday's plunge came after the company said it would raise $7 billion in a series of equity offerings to help satisfy growing demand for its AI components. Sticking with tech, where Intel jumping 7% after the chipmaker was double upgraded to buy from underperformed by Bank of America, citing increasing demand for central processing units. And after today's closing bell, we'll see quarterly results from Adobe and Lennar. I'm Tucker Silva, and that is Wall Street Watch.
Mike, we've got 3 AI pieces that, in my mind, are now painting a concerning picture for AI over the next couple years.
I agree. For the companies that build out the AI and the stock market.
Just yes.
Yeah.
I'm not saying that like AI is not going to be useful or anything. What I am saying is we might be seeing the first signs of the bubble popping. Piece number 1. Oracle falls after data center costs overshadow AI growth. So they are going to be spending $70 billion on CapEx this year, And golly gee willikers, Oracle doesn't have the cash to be able to actually do that, so they've got to do either an equity or debt raise. Tucker said they're doing an equity raise. Okay, this is not, particularly surprising. We've talked about this with Oracle previously, and this is a problem for them.
Can we just compare these numbers real quick? Because I pulled them. So Alphabet, Google's parent company, wants to spend, like 190 on CapEx this year?
I don't know exactly.
It's somewhere in that range.
Sure.
They, as an entity, had revenue in the previous fiscal year of over $400 billion and gross profit of $240 billion.
Okay.
So it's not to say that spending nearly $200 billion, most of your profit on AI CapEx, is not a lot, but they actually have the gross profit. They have the revenues to support it. You just said Oracle was talking $70 billion?
Yes.
Okay, their revenue in the last fiscal year was $57 billion.
So it's obviously more than their revenue.
Their gross profit was $38 billion.
Yeah, and look,
it's like double their gross profit.
Look, their free cash flow over the last 12 months is negative $24 billion. Yeah. Like they cannot finance this out of free cash flow, and so they have to either borrow money or issue new equity in order to do this. So that's problem number one.
Yeah.
Problem number two. One that you kind of touched on a little bit. AI boom stokes inflation with memory chips at insane prices. A lot of these inflated CapEx numbers are coming not because companies are actually saying, hey, we need to build way more than we did previously. It's because they're all competing for the same scarce resources and driving up the cost of them.
Right.
And finally, this is the popping piece. Tucker, do we have a good popping sound that we can use?
No.
No. Okay. That's fine. I don't know what would be a good popping sound as opposed to a bad one, but we have no popping sound, is what you're telling me.
Correct.
Okay.
Yeah,
Thank you, Michael.
Thanks.
That was
we all know what it sounds like. Yes.
We do, but it's still nice. Perfect. This from the Wall Street Journal exclusive. OpenAI considers drastic price cuts, anticipating war for users with Anthropic. And quote here, the move would be in anticipation of similar cuts the company expects at Anthropic, people said. So here's the deal. I've talked for the last 6 months that when we start seeing models coming out every week and this and that, you're getting towards the point of commoditization. And in a commoditized product, what happens is you can't compete on product quality because they're all the same. And so you have to compete on the other thing that's out there, price. And here's the problem. If you are competing on price as an AI model producer, but your input costs are going up, something is going to break there because you are not going to be able to fund that growth at the same time.
The status of this for the last few years has been that you produce the best artificial intelligence at the fastest pace you can, regardless of the cost. That has been the marching order from pretty much every industry, from users all the way down to semiconductor manufacturers. And it's led to things like Oracle's stock price going through the roof, building data centers, Google, Microsoft.
Well, going through the roof and then coming back through the roof.
Yes. It has led to chip designers and electricity providers and Taiwan semiconductor manufacturers, their stock prices all getting a lift on this insatiable demand. And then even got into some areas that we've kind of laughed at, like Ford stock going through the roof because, we have batteries here, maybe we can power data centers. Or Toto, the big toilet manufacturer, seeing their stock price go through the roof because porcelain is needed. The point that you make is the one that we've been alluding to for a while, which is at some point, price begins to matter because you can start to hire people to do stuff cheaper than you can hire an AI agent to do it. And I don't know that we're there yet, but if OpenAI is talking about cutting back price, then they need to go to their data center provider, who I don't know who it is, but maybe it's Google, and say, hey, we need you to cut back on price. Google needs to go to their own manufacturers of semiconductors because they build their own, but they probably buy a bunch of NVIDIA chips too, and say, hey, we need you to get cheaper on price. those semiconductor
It's a cycle.
manufacturers have to go, or the semiconductor designers have to go to the manufacturers, who have to go to the Totos of the world who are making the porcelain and say, get it cheaper for us. And if there is a logical way that this bubble pops, to me, that's it. And whether or not we're seeing the early indications of that, I don't know. But, this story certainly follows the same ones that we saw from Uber just last week when they said, hey, we blew through our entire AI budget in, 3 or 4 months. So I'm with you. We are seeing more stories this last few weeks about the potential implosion here. My problem with all of this is I have an internal bias to be looking for these stories. And for every one of these, there's a dozen about how the train isn't even slowing down.
I'd like to reference something that Citadel Securities put out yesterday, I believe it was, because it actually puts a little bit of data behind this, and I would like to read it into the record, if I may.
Yeah, but there's no record. But yeah.
This is not a court of law?
It's not.
Oh, no. That's probably good.
Yeah.
Here we go. Economic theory tells us that prices perform 3 functions. They signal scarcity, create incentives for substitution, and ration scarce resources towards their highest value uses. That's what prices do. If you're willing to pay more for something, then you get it because, in theory, you're willing to pay more because you can produce more of whatever it is or better value with your outputs. These functions apply clearly to AI. Higher compute and inference costs signal the scarcity of the underlying inputs. They encourage substitution away from low-return experiments and toward more efficient models or workflows. So basically, higher prices, like if you have to pay more to use AI, if you're not getting a return on that, you're going to say, let me use something cheaper.
Right.
We do not think this implies that the frontier of inference-intensive AI will be abandoned, only that the frontier is likely to be concentrated amongst a narrower set of firms with the balance sheet to absorb compute cost, the research depth to deploy it effectively, and most importantly, the operating domain to scale the rewards from solving genuinely hard problems. So when I go and take a look at like my personal AI uses and things like that, the fact that I Googled, hey, what are the best foods to bring to a tailgate for after a game that don't spoil in the car while you're watching it, there's not a ton of value add there, okay?
Wow.
When I plug into the model, hey, what are good beach party appetizers to make in advance? That's not really generating a lot of value, whereas someone who's like, no, I can use it to replace these, and these processes, gets more value out of it. They're more willing to pay more for that than I would be. So here's what we are seeing right now. And this is data that they've grabbed from Silicon Data, Bloomberg, and Citadel's own internal data. And what they are seeing is that in the last few weeks, the rate of token usage, a token is the base level, the base unit that goes in or out of an AI system. The rate of token usage has started to decline. That may indicate movement towards cheaper models. And so this was after it, was growing crazily for March, April, and May. And so we're talking 200% annualized growth rates, consistently through there. So the takeaway from that data, if it continues and if it's true, is, companies were willing to experiment and say, okay, use more tokens. But eventually they're going to want some return from that. At first it was, hey, just prove that we can use AI. And now it's going to be prove that your use of AI is cost efficient. And that means that AI model companies have to start competing on cost, which they've never had to do.
Right. And we brought this up very early on, but the reason everybody has benefited is because you didn't need the best data center. You just needed a data center. You didn't need the most efficient chip. You just needed a fast chip yesterday. If all of a sudden all of these companies now have to compete, I can assure you that some companies have been better at building chips and data centers and models than others, and we just haven't paid attention to who's best at it because it hasn't mattered yet.
Yeah.
And that's where companies go out of business.
Let's take a quick break. When we return, a little bit more AI chatter. We're talking taxes and government ownership of AI when we return.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
This is Susan Powers from the Armstrong Advisory Group. When it comes to Social Security and Medicare, the decisions you make today can have a lasting impact on your retirement. There are key choices to consider, like when to claim, how spousal and survivor options work, and whether your Medicare coverage is aligned with your needs. Without a clear strategy, it's easy to overlook how taxes, income, and healthcare costs all connect. Join us for a complimentary educational seminar on Thursday, June 25th at 5 p.m. at the Marriott in Quincy. We'll help you understand your options and the decisions that come with them. That's Thursday, June 25th at 5 p.m. at the Marriott in Quincy. Reserve your seat today by calling 800-393-4001. That's 800-393-4001 or register online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
All right, we got a piece here from New York Times titled, "For the second time, Trump muses about Americans sharing in AI wealth." Quote, in the Oval Office on Wednesday, Mr. Trump said he would soon host a meeting with the top 12 or 15 executives in the AI industry to discuss the idea of the companies, quote, giving something to the public. He added, if we do that, the public will become very rich, talking about owning a portion of the companies. So here's the deal. In the United States, the way that the public generally receives any money from companies is through taxation of them.
Yes.
And that
We tax
taxation...
their profits. We tax capital gains of shareholders.
We tax payroll tax,
dividends.
All kinds of stuff there. There are really clear reasons why you generally don't want the federal government to have ownership stakes in any significant number of companies. The biggest one being it restricts competition. If you are trying to get into the AI space and you see that the federal government owns stakes in, OpenAI or Anthropic, you're like, okay, I'm not going to go against that. Like, they're going to get the preferential treatment that I won't get.
Yeah.
It restricts competition. The other piece is that when you look at the mechanics of this, assuming that the federal government would have to buy into the companies, which is how it typically works, they're not just going to give you the shares for free. If they did, then we've got bigger problems.
That's the Bernie Sanders plan, by the way, is just to tax the shares into ownership.
So the problem that you end up with here is, okay, let's say that you want to own OpenAI as the federal government. Well, the way that you do that is by issuing debt in order to buy the shares, which means that you're just taking from one part of the government balance sheet and moving it to a different place. Like the ledger has to balance somehow. Yeah. So you're not really doing anything productive there. And again, in small edge cases, like, hey, we need, rare earth materials and these companies are not, competitive globally. How can we do this? Okay, we've talked about this and I've said, okay, you can make a case for it in some of those edge cases where otherwise it doesn't work. There is no good reason for the federal government to own a portion of OpenAI, Anthropic, or anything else.
Intel.
And quite honestly, we used to wait until companies failed before we bailed them out. We used to be a proper country. Now we're just going to bail them out in advance? Like, what are we doing here? That's my point.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top 8 Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
I want to further this conversation about the ownership and all of this because, okay, so let's assume for a minute that we buy into the idea that AI is going to be this massive employment disruptor, which I'm not there, by the way.
Sure.
I think maybe temporarily, but I don't think permanently. But that's the argument that those are making. But if you buy into that, I'm really even unsure about the mechanics of how the U.S. government owning shares in these AI companies is to the public benefit. So, I mean, effectively what you're saying is we are going to somehow ensure that the U.S. government, the U.S. taxpayer, owns these disruptive AI companies in order to what? Sell the shares down the road to pay down the deficit, sell the shares down the road to retrain employees, provide a universal basic income. Who's making that decision? Because it's probably not going to be President Trump.
Sure.
So are we saying, okay, President Trump, we want you to buy these shares in order to allow future President XYZ to sell the shares in order to fund some government program? Are we... I don't think so, but are we delusional enough to think that the U.S. government is going to be a good steward of that money and create good programs to retrain the general workforce or provide for those impacted by this problem?
Probably not.
I'm not confident.
We don't really have those facts and evidence historically.
Yeah.
What the U.S. government has proven to be really good at historically is casting a broad net of just funding large-scale R&D across a wide variety of different industries, whether you're talking in defense and healthcare, like all different areas. you can say, yeah, we kicked money out, and the expected return for the U.S. government and the U.S. taxpayer is, hey, if those companies are successful, then you get the taxes that come through on the back end.
Right.
Not, this is the one that we think is going to be the winner. Let's bet on that. Let's take a quick break here. When we return, hour 2 is coming up.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We've got a guide available this month on required minimum distributions. And, Mike, I want to talk about common mistakes that we see. Sure. Let's start first. People not understanding the difference between inherited and non-inherited IRAs.
Yeah, so if you've ever inherited an account that is retirement in nature, you've dealt with these complicated rules. And to make it more complicated, the rules have changed over the last several years. But suffice to say, unless you meet some very specific scenarios, in most cases, if you inherited an account from a non-spouse, then you're going to have 10 years to empty that account, pay any of the taxes that are due on it, and move along. But in addition, there are annual required minimum distributions, and it is very complicated.
What about a situation where someone tries to delay taking their RMD? What kind of problems can you run into there?
Well, one, if you delay your first year RMD, then you're going to have to take 2 in the same year, and that can really add to the tax burden. But more generally, if you just wait to deal with your future RMDs until you're 73 or 75 years old, you just have fewer options. It's going to bump up your income. You may end up paying higher taxes. You may end up paying higher Medicare premiums. Your Social Security could become more taxable. So it pays to plan early when it comes to RMDs.
Our guide this month is titled Understanding RMDs, and there are 2 different ways you can request it. The first, you can go to armstrongadvisory.com and request it there. The second, call 800-393-4001. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and stocks continue to trade jumpily, I guess is how I will describe it. Yeah, they're trading jumpily, in a jumpy fashion, if you will. The S&P 500 today has been anywhere between 72.57 and 73.27. It's about a 1% range that we've seen. We're currently sitting close to the low end of that, basically up 3 points right now at 72.69. Dow is up 0.4%, 199 points, and NASDAQ Composite up 0.02%, 4 points as well. So, again, just not a lot of momentum in either direction. When we take a look at what's going on in other markets, 10-year Treasury is down 1.8 basis points to 4.522%. The dollar index is up 0.31% to 100.245. The price of gold down another $38 an ounce to $4,095. And crude oil, West Texas Intermediate, is down 8 cents a barrel to $89.95. AAA national average for gas prices is down to $4.12 and 0.9 cents, so another 2.2 cents overnight. We are getting close to where I think we'll bottom out if prices stay in this range, probably somewhere in that 4.10 range, but we might have a little bit more room to go here, and that's obviously welcome as we continue to see gas prices sliding from that 4.55 high that we hit so far in this cycle. Tomorrow is the big day, Friday, and everyone's excited about it.
Yeah.
But beyond it being Friday, it's also June 12th. Which is really exciting, too.
Yeah.
And
one more.
It also happens to be the day that we order lunch for the company here.
Come on. Give it to me.
And SpaceX is going to be IPOing.
Ah, okay. Thank you.
And look, I got to tell you, you got to be kind of excited about this. I know that, you can talk about, well, the company, it's priced too crazily, and like we've had these conversations. But any time that you have the largest IPO in history happening.
Yeah, you got to get pumped.
If you can't get a little excited for that, then I don't know.
You're probably not listening to this show right now.
Yeah, like you should. Then we got to have a talk.
Can we talk about what just weird things with this IPO? What makes it unique other than it being the largest in history?
Yes, what?
So one of those things is usually when you do an IPO, what you do is you go out there and you try and get a sense for how much interest there is in your IPO, and you use that interest, how many offers you have to participate in the IPO, to help determine a price. They went the other direction on this one. First, they said, hey, we're setting a price. The price is X. It's going to value us at $1.75 trillion, and let us know if you would like to participate. And so what we've seen here is the price is, $135 a share on the offering?
Yes.
And it's oversubscribed by somewhere around 4x.
Yep.
Normally, what that would mean is drive up the offering price, but we're not doing that here. It's a unique circumstance, and that's what Elon Musk has decided to do.
Well, let's be clear. Let's be clear. If an IPO is not significantly oversubscribed, it'll get pulled.
In the first place, yeah.
Okay. The minimum that you're looking for is generally like 3x oversubscribed, ideally like 7 to 8.
Mm-hmm.
So when people are like, oh, like the IPO is oversubscribed,
normal.
It should be. If it's not, it will get pulled.
They are offering about 5% of their shares outstanding in this IPO. Very small portion.
Small float.
When all is said and done, the types of shares that are being offered don't actually give you any control over the company. Not why most individual retail investors buy a company in the first place, but Elon Musk, in spite of having a much smaller ownership of SpaceX, will retain 80% voting power over SpaceX.
Yep.
So, look, a lot of ways this is a very unique circumstance for a company going public, but nonetheless, as you pointed out, the single largest IPO that we've ever seen.
And I think that the cool thing about this, like the thing that I do think is really great about IPOs, all the people that have worked there for whether it's 10, 15, 20 years, the estimates that I've seen are that you're going to have like 4,000 people that are now millionaires that have not been before.
Yeah, pretty cool.
You know?
We've all heard those stories occasionally of the secretary who
cafeteria
becomes
worker,
a millionaire overnight. But yeah,
it's great to see that stuff. The question still exists in terms of, hey, what's going to happen like after it IPOs? Like, how will it trade? Will it be able to support that valuation? I got to be honest, like, let's save those for, not tomorrow. Tomorrow you can just say, hey, it's cool to see this. And again, the price long term will be what the price is going to be. But obviously a ton of hype around this. And the other thing that I will say that's been kind of funny to watch, and again, there are probably some people that played this exactly right, like knowing that idiots would do this. You guys remember Virgin Galactic? Richard Branson's space company that basically hasn't done anything in several years. I think they had some kind of like launch failure or something a few years back, and the stock's down like 97% or whatever. Like it hasn't done well.
Yeah.
Starting about 10 days ago, the stock, which was trading at about $2 a share, trades under the ticker SPCE. I don't know if a bunch of people thought they were buying SpaceX.
Oh, no, probably. This happens all the time.
Either way, the stock went from $241 up to $890 and now is back at $562. So there's someone out there who probably was like, hey, a bunch of idiots are going to try to pile into this thinking it's SpaceX, and someone probably like has just been sitting there for the last month or so and, maybe exited at the right time. But I bet there are other people that are still in it now that think they are in SpaceX when really they are in Virgin Galactic, because you occasionally see stuff like this.
Yep.
So that one,
buyer beware.
That one caught my eye a little bit. Another thing that I will say, again, when we talk about IPOs, the thing that is not unique to SpaceX, and we've talked about this, most IPOs at some point in their first year go through a massive drawdown. It doesn't mean they close the year down, but when you look at, the laundry list of big IPOs, Facebook, Twitter, Alibaba, Shopify, Block, Twilio, Snap, Okta, MongoDB, Dropbox, Spotify, Lyft, Zoom, Pinterest, Uber, CrowdStrike, Cloudflare, Datadog, Snowflake, Palantir, DoorDash, Airbnb, Affirm, Roblox, Coinbase, Robinhood, Rivian, ARM Holdings, CoreWeave. Again, this is like big ones over a 15-year period. That group has averaged a 55% drawdown at some point in year one. Now,
meaning 55% drawdown means that the average company at some point during their first year of trading lost 55%, more than half of their value.
Yes.
From some previous points during trading.
Yes. The minimum drawdown for any company, any of those companies during their first year trading, was 20%. Can you guess who the 20% was?
No.
It was Okta, who I think they're like an internet database company
Didn't
or something.
even remember you mentioned them.
So, again, this doesn't mean that they finished the year down. The average one-year return was up 14%. But the word of caution is IPOs, even if they do well, even if you're like ARM Holdings, which rose 132% in its first year, it went through a 43% drawdown in the middle of that.
Get ready for the roller coaster.
And you need to understand that is a feature of IPOs, not a bug. It is you're not buying. You're not buying, something like you're not.
AT&T.
No, I keep thinking of like AT&T and Verizon, and I'm like, but they lose 50% in a year too sometimes. Like, they haven't been well managed, so like that's not a good comparison. You're not buying like a CD.
Yeah.
These are gonna move in both directions, and you got to be willing to stomach that if you want, to be part of it. Let's take a quick break. When we return, we've got trivia, and then we're talking Meta.
From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange. Without the right estate plan, your family could face unnecessary costs in the future. The right trust may help your loved ones avoid probate and better protect family assets. Get Cushing & Dolan's new guide called Demystifying the Top 8 Estate Planning Trusts by calling 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Markets move fast. Follow the Financial Exchange live on X so you never miss a story. This is the Financial Exchange Radio Network.
If you missed any of our shows from this week, you can go and find them on our YouTube page. We stream the show live every day, but also archive every hour and offer highlight clips of the show. Just go to YouTube, search for the Financial Exchange, and hit that subscribe button. Time for a trivia here in the Financial Exchange, and the U.S. men's soccer team will take on Paraguay tomorrow night for their opening World Cup game. The U.S. team has never made the World Cup final, which means they have never finished the tournament in the top 2 places. So our trivia question today, What is the highest finish the U.S. men's team achieved at the World Cup? Once again, what is the highest finish the U.S. men's team achieved at the World Cup? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you'll win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal, Meta's subscription push exposes its weak hand in AI. What's laid out in here?
That this is a company who has only ever made money based on selling ads, and they're trying to pivot because they've got this tool that is not terribly conducive to... Well, you know, I'm not sure I'm willing to say that it's not conducive to selling ads. They've clearly seen ad tick up and more eyeballs on their content, which has led to better ad sales. But they're trying to figure out new ways to monetize AI and all the spending that they want to do. And I'm just unclear that they're going to have any success in getting me to pay a monthly subscription to have access to their artificial intelligence AI creation tools.
Well, that's not even what this really is.
Yeah.
The subscription they're talking about isn't like the Instagram. What do they call it, Tucker? Instagram Cool or like?
I have no idea.
It's a $3.99 a month Instagram subscription. And look, here, I'm going to sound really skeptical, but that's because I despise social media and I don't even have an Instagram account.
Instagram Plus, I'm seeing.
Is it? Okay.
Yeah, it's original.
Real original, guys. Like, great job, Mark. Quote, for about $4 a month, users of Instagram get some personalization features, more information about who's watching their videos, and a super heart animated reaction they can use on Instagram stories.
Super heart.
Super duper heart. So, look, it's clear it's not for me. I don't know if that's going to be taken up by 0.5% of Instagram users or 30%. I don't know.
This makes a lot more sense in Europe than it does in the U.S. Right? When you take a look
to sell a crappy product?
Yeah, well, only because if you're Facebook and you're looking at your business, I haven't looked at this in a while, but you remember, like I do, that their revenue per user in Europe is far lower than it is here in the United States because they actually respect people's privacy, so it's tougher to sell ads there. And so if you're looking at your business, you might say, hey, all right, let's go sell this crappy product in Europe because that base isn't worth that much to us anyway. Maybe they're less likely to pay anyway, so maybe it doesn't work. But I'm with you. It's not for me either. I don't know, who is going to subscribe to this. I suppose some people do. Yeah, I'm assuming. Well, I actually don't know. Like, does this give you a product that is also less focused on advertising? Because it doesn't. That wasn't one of the features that it mentions here. Is that it's going to sell fewer ads to you. So I don't know. Maybe somebody is willing to pay for it. It's not me.
Meta's never been able to sell anything but ads. They've had all kinds of devices they've tried to roll out.
Yeah.
None of them have stuck. They've had the metaverse, which obviously didn't stick either. They've pretty much they haven't canceled it, but they're getting close to it because no one wants it.
Mm-hmm.
I'm just not sure.
The only group that I can think of that would be willing to pay for access to these platforms are the big content creators.
And the estimates that we have are that there are like 11 million of them in the U.S., and so that works out to like $500 million in revenue a year, which is a drop in the bucket.
Well, but the further problem there is, what are you going to do? Start charging the people who are the only reason other people are on your platform?
Yes.
Right? Like,
yes.
If I only go to Facebook because I like watching silly videos of
cats.
Yeah. And all of a sudden those cat videos disappear because Facebook starts charging the creators, then I'm not sure that you're leaving the product any better than it was before. So I don't know. suspect that they can do anything other than sell ads, but they are damn good at selling ads.
Right, here's the thing.
I just don't think that puts them in a great position to develop the latest and greatest artificial intelligence, and that's what they're racing to do rather than just waiting for the model that they can utilize.
Yeah, they've got a great ad business, and like it's one that's been growing for the last several years.
Yeah.
The issue is that they keep trying to do all these other things, and there's just no evidence that they're any good at it. You know, it's... When's the last time Facebook did anything interesting? I'm not saying that they're like a bad business. I'm not. But when's the last time that they did something and you looked at it and you're like, oh, hadn't thought of that. What a great idea, Mark.
It was when they bought Instagram.
Which was what, 15 years? I think it was like 2011 was when they bought it, right?
Yeah, there has not been much that they've put together of late other than getting better and better at selling targeted ads. And they are admittedly better than almost anybody at that.
Yes. It's them and Google.
Yeah.
Like they're the only games in town.
So like hats off to you for that. You know, you said they're not a bad company. They might be an evil company. But they are they're very good at what they do and at their, you know, bread and butter. But I'm with you that they haven't made successful hardware. They haven't made successful gaming or universes. And now they've poured a lot of money into artificial intelligence, and I'm just not sure the point.
And the other thing that I will add, the only way they've gotten to where they are is by buying the competition multiple times.
Sure.
They bought Instagram.
Yep.
And they bought WhatsApp.
Yep.
And, okay, like now who's going to compete with you when you get 3.5 billion users? Like the network is what provides them that stability and that platform. I don't know. It's...
I saw
kind of a tough putt.
Did you see an ad for a new Facebook movie?
Yeah, Social Reckoning.
Yeah.
Yeah. I like that.
Maybe. We'll see.
Yeah. Yeah.
Yeah, they got rid of Jesse Eisenberg. Replaced him with Jeremy Strong.
Mm-hmm.
Which, the casting's fine. The piece that's interesting to me is the first one, The Social Network, which came out back in 2010.
Yes.
David Fincher, who admittedly I'm biased in thinking that he's one of the best directors out there, directed it.
This one's Sorkin.
It's Sorkin directing. And, like, again, you look at Aaron Sorkin's, you know, career, and he's directed, you know, a few movies here and there, but none of them have done anything interesting. You know, he's a writer, and he's a really good writer.
Yeah, all I can remember is, like, that Sorkin did recently was The Newsroom, which was a series on HBO. That was pretty good. A lot of dialogue in that one, though.
Even that didn't direct. He was the writer. He
wrote it.
He was an EP on that. Didn't direct it.
Oh.
You look at his directing career. Molly's Game in 2017. Trial of the Chicago 7 in 2020. And something called Being the Ricardos in 2021. That's it. Quick break. We got Trivia Answer and Wall Street Watch next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Another bumpy day for markets where oil prices are in focus after President Trump threatened to again strike Iran tonight. Investors also reacting to a hotter than expected producer price index where wholesale prices climbed 1.1% in May. Right now, the Dow is up over 0.5%, S&P 500 up about 0.25%, NASDAQ up over 1/3%. Russell 2000 is now up over about 1.5%. 10-year Treasury yield down 2 basis points at 4.52%, and oil up about 1/3%, trading at $90 a barrel. Oracle falling 12% after it posted a larger than expected spending related to its data center build-out. Oracle also said it plans to raise an additional $20 billion in equity to pay for its AI build-out. Meanwhile, after sinking 28% yesterday, Supermicro computer shares are edging higher today. Yesterday's plunge came after the company said it would raise $7 billion in a series of equity offerings to help satisfy growing demand for its AI components. Sticking with tech, where Intel shares are up by over 4% after the chipmaker was double upgraded to buy from underperform by Bank of America, citing increasing demand for central processing units. And after today's close, we'll see quarterly earnings from Adobe and Lennar. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what is the highest finish the U.S. men's team achieved at the World Cup? That would be third. The U.S. finished third at the very first World Cup back in 1930. So winner today was Sean in Brighton, Mass, taking home that Financial Exchange Show t-shirt. Congrats to Sean. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
That was fun. I remember that one.
1930.
Yeah. It was a good one.
Yeah. Yeah.
You know who came in second?
The Germans?
Argentina. And in first place, the home country that hosted the first World Cup.
Canada.
Uruguay.
Oh.
Very close. The Italians then rattled off 2 in a row before Uruguay won the fourth one. And then finally it was broken up by the West Germans winning in 54. And then the Brazilians took over and kind of ran the sport for the next couple decades.
We don't have anything else going on. You can just list the World Cup winners for the next 45 minutes of the show.
I will literally pull the plug if you do that.
What if I?
Sorry, affiliates.
We're going to break.
No, silence would be better than that.
Okay, it's fine. It was just an idea, but we're not going to do it. It wouldn't fill that much time. There's only been like 24 of them, I think. So it's not a long list.
Test Tucker's patience.
Go ahead, take that vacation. You may be spending too little in retirement. That is the title of the piece in Barron's today. And I find the conversation about too little or too much to be... The too little conversation's bothersome to me, to be honest.
Okay.
The too much one, I understand. Hey, you're spending too much. You're going to run out of money before you die.
Problem.
Bad thing. Hey, you're spending too little. You could spend more. Well, I don't need to, so why are you going to make me?
Yeah, and I don't know if this is just a, cheap Yankee thing, but, when I do have those conversations, it's not as though I run into a lot of people who spending additional money would actually make them happy.
No.
So I'm with you. That part bothers me. I do think they point out one accurate piece that a lot of people don't account for in their spending, though, in retirement, which is this idea of the retirement spending smile. So we like to describe shapes to every, chart that we put together in the United States, but what they're talking about with retirement spending
it's a U-shaped retirement.
In terms of your budget, and here's why. When you are early retirement, it's go, go, go. You want to take those trips that you haven't had time to do. You want to spend on this, that, or the other. You might have new grandkids or kids getting married, so you might spend some money on that. Tends to be pretty expensive. By the time you're 80, you've slowed down. If you had 2 homes, if you took an annual vacation, you might not do it quite as frequently. Your kids are married. They've already had their kids. There isn't that big demand on your budget. Again, these are all averages.
Sure.
And then it plateaus at some point and then starts increasing again because
it plateaus, actually. It doesn't plateau.
Yeah. You hit your late 80s and you know what? You can no longer mow the lawn. You can't go to the grocery store on your own, and you need to hire some help for your health situation if you live long enough. And so oftentimes we don't account for that smile shape of the spending. And so from that perspective, we can overestimate and therefore be too conservative in our projections. That said, I've never met anybody who's made it to 89 years old and been like, oh man, I wish I had nothing left in the bank now. It's not happened to me personally. Maybe somebody has gotten there. But I will admit for a moment here that plenty of people fail to take that into account and do underestimate how much they can reasonably afford in their retirement. Or what they end up doing is presume that they must work till 67 to make their financial scenario work. And that's the one that kind of bothers me more than all the rest of them is, what if you could have retired 3 years ago and you broke your back for 3 extra years when you really didn't need to?
Yeah, that's the one that's more bothersome than, well, you didn't spend enough this year. Well, I was happy. Why did I need to spend more?
If you are facing down a retirement in the next decade, you probably have a lot of questions. We have put together a series of events coming up here this summer designed to address two of the most common questions that the advisors at Armstrong Advisory get about their pending retirement. It's Social Security and Medicare, and we've got a seminar on June 25th down in Quincy. It's free to attend, and it's going to attempt to answer any and all of your questions about the complexities of these two programs that for a lot of people make up a large portion of their retirement decisions. If you are facing those decisions in the next few years, if you're already there and need to select your Social Security benefit or are curious about how it works because you're divorced or lost a loved one or are worried about those things, go to armstrongadvisory.com/events. You can register for free. Again, it's June 25th is the next one. It's in Quincy at the Marriott. It's at 5 p.m. and it's free to attend. armstrongadvisory.com/events or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The World Cup is kicking off today with 2 matches, and in order to handle the logistics of everything, you've got 5,000 vehicles that are going to be coordinating, shuttling all of the team equipment between the different stadiums throughout Canada, the United States, and Mexico.
All Waymos.
So which team is going to end up having to wear the backup jerseys because the vehicle got lost or stranded, or Scotland's going to show up with Mexico's jerseys or something?
They usually have backups. They've got plans so that doesn't happen. But it is kind of wild because here's the complicating factor in all of this is just the sheer geographic distance that this stuff has to travel.
I'm just picturing one of the teams doing shirts and skins now.
The last World Cup, I know, right? The last World Cup was in Qatar.
Yeah,
the entire country of Qatar is I don't know exactly how big it is. But my guess is probably somewhere along the size of one of the New England states. You look at the other ones before that. Okay, 2018 was held in Russia. Yeah, but it's the size of Connecticut. Yeah. There you go. Russia, yes, big country, but you're not traveling to Siberia for the thing. All of the stadiums were right in the western part of the country. So, look. They'll figure out how to do all of this stuff because they have billions of dollars at stake and they're going to make sure it works. If you could figure out the logistics in Brazil back in 2014, you can figure this out. It's you literally then, one of the stadiums in Brazil back then was in smack dab in the middle of the Amazon. If you can get the teams in uniforms there, you can get them from Boston to Los Angeles without any problems.
Where is Iran staying? The Iranian team staying during all this? Was it Trinidad or something like that?
I have it somewhere. I have the list of where everyone is staying. The fun ones that have been really cool to watch are Spain was in Chattanooga, I think it is, and so it's just again, you got just a bunch of Spanish people just going through Tennessee, wow, look at the barbecue here. This is wild. I had. Again, it's if you're not following, this is, I think, the one redeeming piece of social media is you get to see the cool stuff like this where, again, there's a guy in the Boston suburbs that woke up this morning and a bunch of Scots had taken over the house across the street and were playing bagpipes. There is a guy from, let me see where this guy's from. Just because, again, you find all of these and you're oh, these are fantastic. This is a guy from Scotland as well who... Literally, the caption on his video is just, Scottish guy in America for the World Cup, and I just discovered the mac and cheese here is way better by a very large margin. This is the stuff that's just great. It's a bunch of people from Europe, Asia, South America, from everywhere just coming and being oh, this is pretty cool here. Like, I didn't know that you guys had this. And I think that's pretty fun and pretty great. So I'm excited personally. But that's just me. Let's take a quick break. When we come back, we'll do a little bit of stack roulette and then read off all the World Cup winners after that.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. As you age, the IRS stops asking you to save for retirement and starts insisting that you take money out. Those withdrawals are called required minimum distributions, and if you don't take enough, you could face a penalty of up to 25% of the amount you were supposed to withdraw. If you wait too long to take the first distribution, you could end up with 2 taxable withdrawals in the same year, which might push you into a higher tax bracket or increase your Medicare premiums. Our new guide, Understanding RMDs, covers this issue and others to help you prepare for this important retirement deadline. Get yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust can do a lot more than simply pass assets to your family. Certain trusts may help keep your estate out of probate, protect assets for your children, and in some cases, even help reduce estate tax liability. Cushing & Dolan has created a new guide called Demystifying the Top Estate Planning Trusts. It breaks down some of the most commonly used trusts in estate planning, including trusts designed to help families plan for long-term care, protect beneficiaries with special needs, and help keep life insurance proceeds outside of a taxable estate. You'll also learn why simply having a trust isn't enough, because if it isn't properly funded, it may not accomplish the goals you expect. To get your free copy, call Cushing & Dolan today at 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
Mike, what do you got for Stack Roulette?
I'm going to go with the backdoor references that employers are using more and more to vet employees. So what has always happened for years is you go look to hire somebody, and if you happen to know anybody in common, you might go ask that person, hey, what do you think of this employee? But you don't make it public. You don't tell that person that you asked about them. These days, people, or employers in particular, are whining and complaining and struggling to figure out who is actually a good candidate in the days of AI job interviews, AI resume building, and all sorts of, very easy ways that employees or prospective employees can get around knowledge testing and all sorts of different features. What I dislike about this is that it's leading more people to, go behind their backs and go ask employees. What I do like about it is that it is another indication to me that the emergence of artificial intelligence is seeming more and more like it's causing everybody to trust what they hear on the internet less and less. And that might result in a really difficult period of time where, we have to learn how little you can trust what you see on the internet. But more and more, I think it's forcing people to actually have human conversations and do interviews in person, spend a little bit more time on actually talking to human beings because, you're right. You cannot necessarily trust what you read on somebody's resume or how successfully they complete an online test for their knowledge.
I've said this before, but it's going to be wild when the proliferation of AI triggers us to use the internet way less than we used to.
Yeah, I can see now a path where it goes that direction. But again, stories like this are not exactly good ones. Like, okay, so the employer's basically just, utilizing their network to hire people, which means that you're not going to hire anyone from a different economic background. You're only going to hire people that are like you. I don't love that. But on the other hand, it is showing once again that, you cannot trust stuff that you see on the internet, and hopefully we get closer to that.
Tucker, is there anyone that you've seen recently that is a little unusual?
What do you mean, Chuck?
Well, the weather outside seems like it's getting a little warm for this type of time of year.
Yeah, it does seem a little hot.
And I'm just wondering if you've spotted anyone maybe off the Pacific coast.
Oh, you know what? Yeah, I did.
Oh, you have?
I did, yeah.
Who'd you spot?
I am El Nino. All other tropical storms must bow before El Nino. El Nino is Spanish for the Nino.
That's right, ladies and gentlemen. El Nino is back, and apparently, according to meteorologists, it looks like we might get the rare Super El Nino, which I don't know how you can have. Again,
it's El Nino plus.
What, can't we just call it like the adult instead of like the child? Like, could we go that direction? But in any case, there is apparently, according to the U.S. Climate Prediction Center, there's a 63% chance that we could have the Super El Nino heading into 2027 that might be one of the most powerful El Ninos heading back to 1950.
Okay, so as funny as Chris Farley was in that sketch, this is actually a potentially massive problem because already farmers across the globe are struggling to get their planting season in with limited fertilizer resources. Sudan and other parts of Africa are in famine now.
And El Nino makes Africa much drier. Same with India, Australia, Southeast Asia, and Brazil. It adds additional rain to the southern part of the United States. And so
the reporting coming out of some parts of Africa already have been pretty tragic in terms of food security recently, and
especially they're dealing with fuel shortages as well, as they've been one of the basically relief valves for not having enough oil production worldwide.
Yeah, so this very much has the potential to get very, very serious for some of the poorest parts of the world in 2027. We are fortunate in 2026 that in terms of global food supply, we went into the conflict in Iran in a far better place than we did the Russian invasion of Ukraine. that could be diminished greatly by a very bad El Nino season.
Yeah, something to watch. As we see how things develop here. Taking a look at markets as we head towards the top of the hour. Still, some modest gains that we're seeing. Dow is up about 250 points. S&P's up 15. Nasdaq's up 89. So anywhere from about 1/4 to 0.5% gains across your major U.S. indices today. And everyone again kind of is waiting for the SpaceX IPO tomorrow. And so obviously, look, tomorrow's show, we're going to be covering that quite a bit. Before we go, I guess a couple data points out this morning that we didn't touch on. PPI Producer Price Index came in hot again, now running at a 6.5% 12-month price gain for the PPI. Core PPI up 4.9% for the last year, so continuing to see some signs on that side. Jobless claims, still pretty low, up a little bit. There's been some residual seasonality this time of year for the last few years. Probably the case here, up to 229,000. Nothing to write home about, but just something worth monitoring. We're going to take a break for the rest of the day. We're back tomorrow, and we'll finish up the week with the SpaceX IPO then.